time. Well, for more on the markets, we're joined by David Dietze in New Jersey, and he is the founder and president and chief investment strategist at Point View Wealth Management. David, great to speak with you today. So, we've had this powerful three-day bounce in the Dow Jones Industrial Average back into bull market territory. Will the S&P 500 and the Nasdaq join it?
Well, certainly could. Remember, of course, the Dow fell more than those two indices, and under some definitions, coming back 20% or more from that bear market low qualifies as a bear market. I should caution you that other more conservative market seers require us to set a brand new high, and all the indices are, of course, way below their February all-time highs. Nasdaq and S&P 500 have a ways to go just to get 20% off the bottom. Obviously, all eyes are really on the path of the coronavirus. Remember, that is the central cause. And although we're talking about this massive stimulus and we're talking about the very low interest rate cuts that have been put into place by the Federal Reserve, that can only deal with the symptoms. The underlying cause, of course, is what we're all focused on, which is the path of this virus. Where does it peak? Where is it going? In the meantime, we're going to have tremendous economic fallout.
Well, with the trajectory of coronavirus hitting the U.S., which has now overtaken China to be the most infected country in the world, according to the latest statistics, how much time will investors give health officials, time to come up with this vaccine, whilst the fundamentals of the economy in the United States and indeed across the world continues to look horrible?
Well, I'm afraid that the coronavirus is going to dictate ultimately the terms of the length of this period. Having said that, of course, all scientists and research pipelines around the world are working on a couple things. One, of course, is some sort of a vaccine to immunize those who don't have it. They're also working, of course, on a cure to speed the recovery of those who have. I think the other thing that people are very focused on is how quickly can we get cheap, quick, plentiful testing kits. If people could, in the same way as before they board a plane, they're quickly scanned to see if they have a weapon. If somehow there's a testing kit where people can wave it over others and make sure that those who are in a hotel, boarding a plane, going into a sporting event are deemed safe, that would also restore public confidence and get this economy off the ground again.
Well, let's hope they do get that. But, I mean, David, in the meantime, what do you expect to see out there in the markets? Is this going to be a V-shaped recovery, an L-shaped recovery, or, I don't know, a W-shaped recovery? Is there such one?
No one really knows. And of course, we're advising our investors that if you have a time horizon that's longer than the expected life of this virus, and no one really knows, and of course, it could come back the next season, in the next winter season. But if you have a time horizon that goes past that, then this is the time to rebalance to your long-term asset allocation targets. Remember, in this country, we have seen many health scares before, going all the way back to the Spanish flu in 1918. We've never failed to get past it. We have seen downturns in the market over the last 100 years. This country and this stock market has never failed to come back and set another all-time high. No one, of course, really knows how long that's going to take, but there's many reasons to believe that this is more like a storm, and we're approaching the eye of the storm. Eventually, it will pass. I think people are taking a lot of comfort because they see some signs of stabilization in Asia. And even, of course, in Spain and Italy, the number of new cases have seemed to level off. But I do think that a lot of experts are saying when we see recoveries start to match new cases, that's a true sign of leveling off, and that will be the all-clear signs. Having said that, stock markets, of course, anticipate. They don't wait for the news, and that's, of course, why we've seen this tremendous run-up the last few days.
Well, if you were to line your ducks in a row then, as we sort of are in the eye of the storm, and we exit that hopefully at some point, how should one deploy capital under these conditions, which are extreme and extraordinary?
So, of course, you want to always stay diversified. Interest rates are at record lows, but we analogize these low interest rates. People say, well, why should I have bonds? Because, of course, it's like a very high price for insurance. You never know what's around the corner. We have seen that here. So you still want to have your strict allocation between stocks, fixed income, and cash. Within the stocks, the question is, what groups are going to do best? Some people, of course, say, well, what is the new normal, and want to perhaps chase some fads that are now in favor, like cleaning aids and other things that we're using when we're staying at home. I think you're probably better off to look at what's been hardest hit and assume that those things ultimately come back to normal. Certainly, the travel and entertainment industries have been very hard hit, but for the last 50 years, more and more people are traveling. They're flying by air. They're going to casinos. They're going to hotels. So that may be a way, if you're looking for the biggest bang for your buck longer term, to take advantage of it.
David, appreciate it, and you stay safe there in the U.S. Good to be chatting with you. That was David Dietze in New Jersey, the founder, president, and chief investment strategist at Point View Wealth Management.